Today's number is 1 because we've just witnessed some of the largest transactions ever recorded when it comes to precious metals. And it comes off the back of course, a historic crash last Friday into the weekend. So with the new Fed chair being announced and of course, big earnings season going off in the US, what exactly is in store? And could we be seeing something when it comes to some form of contagion? Join us in Pepperstone's Macro Edge as we take a look at everything that you need to know, whether you're an investor or trader. See you soon. Well, welcome back everyone to the Macro Edge. My name's Thomas Atkinson, and today we'll be discussing what Wall Street's been up to, the macro flow, and obviously the data surrounding it. But we'll start things off here by discussing what just happened in a historic crash across gold, silver, and many other precious metals. And by now, I'm sure you guys are all aware of what has just happened. But could we be seeing signs of maybe some support coming in after such a massive sell? Well, the good news is we have seen some wicks rejecting off critical levels we'll look at in later on today's video for gold and silver. But we also saw some of the largest transactions ever recorded on some of the big trades, including this one here on GLD, which is number 1 and number 2 largest ever recorded big dark pool and normal transactions. This is thanks to volume leaders, and you can see it means quite a big deal, especially when they're all coming in what we call a cluster. So could that be a buy? Well, let's firstly take a look at one of the analogs here from Nautilus, which basically goes through each one of silver's largest rallies and then kind of works out what happens after an event such as this. And you will note that it's not all good news when you're looking at silver anyway. After a historic bull run, often a crash like this does end up in quite a lot of consolidation. And I often say to stop a freight train in terms of the crash here, it can take some time in terms of the charts. So although we've seen a rejection, it might be that this is only the beginning of a lot of volatility for quite some weeks to come. Remember, if it's in the press, it's probably starting to end up in the price. Speaking of dark pools and large transactions, we did see some big ones come in just before the sell here, including SIVR, which is an ETF for silver, of course, physical. And you can see here it was a big dark pool sweep that came in, and then soon after that we got massive fall off across the board. So it kind of suggests that there were quite a lot of big players in this particular silver and gold bust, and of course there was a lot of liquidations across the board. Now, does that mean that we're in a market, crash, or is there something wrong in the markets completely? Well, yes and no. Often when you see precious metals do what they've been doing, and at the same time, of course, we get this idea of something to do with dollarization and maybe de-dollarization, that is a concern. But at the same time, as traders and investors, it can also be seen as an opportunity. And we also have to ask ourselves the question of, has it actually appeared in all markets? And for the S&P 500, it hasn't seemed to do so. A lot of people jumped into puts over the Friday close, and Subutrade here has reported it's gone past one of those major thresholds. And often these thresholds actually line up with bottoms of markets. So as soon as something goes wrong, especially late 25, 26, it looks like many people are jumping straight into protection straight away because they're concerned about what's to come. And often at that point, the market hasn't quite finished on its runs. And one of the reasons why that is because of earnings, which we'll go through in a moment, which has been pretty good so far. So by now, you're probably aware of Kevin Warsh's appointment by Donald Trump to become the next Fed chair. And according to Anna Wong, she's actually gone through here on X and actually figured out what Kevin has said over time in terms of when he was on the Fed chair board. And you can see here, he was really talking a lot about inflation, in particularly even during the period of the global financial crisis, he was concerned about inflation coming back. So it's going to be an interesting year, but the market did take that as an opportunity to really look at a couple of things. Number one, that we probably weren't going to get as many rate cuts as once were suspected. So now it's only 2 cuts expected for the rest of 2026, and that it's probably going to be the end of the cuts at the end of this year. At least that's what the market is saying, and this chart here is courtesy of Duality Research over on X. And you can see here that basically once we found out it was Kevin Warsh, the actual interest rates, that is the yields for the 2-year, the 10-year, etc., all went up. One of the big things about his policy moving forward is going to be that he has this really big thought process that AI is going to cause deflation, and that, of course, maybe fiscal monetary systems might need to be kind of, bought back in and tightened a little bit. So that could mean that liquidity is going to dry up as well a little bit throughout this year. Again, possibly creating some very volatile periods, which for traders and investors like you guys and me could be quite interesting in terms of opportunities. The overall profit margins, though, this earnings season certainly don't seem to be bad. And this ties in with what we've seen in markets so far. Investors have actually started to turn more bullish than bearish, according to the market stats and the AAII investment survey report. And you can see that when this actually does happen, you might think, well, that means it's probably all over. Actually, the markets do tend to be a little bit better for a little while here. They can have some volatility in them, and then they do tend to lead into actually bullish action overall. And I think the key here is going to be to follow the trend until we see it broken. And we haven't seen that yet on the S&P. The market stats also shows here that January has ended, which means another month has ended. And we're 9 consecutive months up in the S&P, 9 consecutive months up in the Dow Jones. And in all those cases, generally the markets were pretty decent, especially 10 months and 8 months later. So again, can lead from strength into strength. And it's kind of unusual to see it where we are in the markets, especially with defensive stocks doing better. Duality research here showing that energy's been one of the best performers so far in the markets, materials in the last month in terms of stocks, and of course consumer staples also doing quite nicely. Interestingly, financials is down the bottom, which can suggest that we're moving more to a late cycle style market. When you have especially consumer staples going up the most, that can be a bit of a sign there. In terms of quarterly EPS estimates, you guys can see here that it is going up, and it has been a pretty good earnings season so far. Palantir just announced, and they were up in after hours. We've seen some mixed results. Microsoft, of course, were down. Meta was up. And in general, the Magnificent Seven, which is kind of the barometer of the market, has been living up to, I guess, expectations so far. S&P 500 ended up January bullish, which is a good sign. Again, the market stats here with some excellent stats showing what tends to happen over the rest of the year. And generally, when you end January pretty well, you do tend to still have, although a volatile market is possible during midterms, an overall bullish kind of statistic there. Commodity prices are still in focus, and we've seen, of course, gold and silver do some rebounds, and they've broken out of multi-year kind of holds. And you can see here, energy sector, especially over the last month, which we've been discussing here on the Macro Edge, has been one of the strongest sectors, with 95% of energy stocks actually performing very, very nicely and above their 200 DMA. So this is the first time in a year, and that does tend to lead into further strength. So it is showing that overall there's still some strength in the markets. In terms of earnings this week, watch out, guys, for quite a lot of earnings. We've got AMD, Supermicro, earnings whispers here. Google, ARM, Amazon, quite a lot. And the options market is going to say that a lot of these have some pretty large moves on them. So plus minus 13.5% for Supermicro. AMD might be plus minus 9. These are big moves. So just remember, earnings, while it does create opportunity, also does create some risk. And Earnings Watcher here does track the options movements, which is really, really sweet. Let's now jump into the charts and have a look at the S&P 500 to begin with. The good news is, and you can do this within Pepperstone connected to TradingView, is the advanced decline line continues to kind of just trundle on up as the market remains dull, which we've been talking about. Is there a lower low? No. So therefore, if you've got kind of advanced decline line going up, and everything like that, that's going to be pretty important. The key here is going to be 7,000 though. This is a critical 1,000 metric, and often markets struggle with those periods, at least initially. We can see the sell-off from 7,000. We've rallied back up to it, and this is kind of like a make or break moment. A lot of the time when it breaks through a key 00 number, or 000 in this case, then we usually do end up seeing a little bit more bullishness. So that will be key. In terms of bond watch so far, guys, we haven't seen the American bonds freak out too much. We've been tracking things like the American consumer, which we do with the discretionary versus staples code. And you can kind of see here, it looks like that might be weakening a little bit, but maybe we'll have to see until Amazon earnings this week, whether that's coming through. But in general, if you track things like corporates, you'll notice that most corporates are up and they're actually holding still. So corporate bonds, which is high-grade bonds, they're still doing relatively well. In terms of the US dollar and currencies, this has become a pretty favored trade. Currencies suddenly coming into focus in January. We saw a fall off, but as we've mentioned before, this trend line's the one to watch. Break below could expose some big shorts on the dollar, maybe down to 89.6 for the dollar index. And of course, a break of 100, basically parity right now, you're probably going to be seeing quite a lot more strength. So US dollar Swiss, US dollar yen, all the ones that broke down, basically saying that people were going towards safe havens, often considered the yen and the Swiss. Both of those have started to reverse a little bit after this new Fed chair, but we don't know that's going to hold. So the most important thing for us to watch, I think, in many ways, is going to be yields. 10-year, 2-year, 5-year, all of these ones. And at the moment, they're all actually spiking up, which is kind of strong for the dollar. It's also kind of strong for oil as well. So we've seen things like energy stocks breaking out in recent weeks, which we've discussed here on the show. In terms of metals, the major key is going to be between 4,300 and 4,400 for gold. We can see volatility has maintained. We also saw that we had these huge moves through the Monday session as well. But this is kind of what we call cross-analysis kind of correlation. So gold hit into the first key demand. Silver also hit that massive demand over here on the left-hand side and started to what we call long leg doji, so basically started to consolidate a little bit. And copper also hit into a major support along with platinum and palladium. So they continue to be kind of the levels to watch on these charts. To go over to the market, the NASDAQ still hasn't broken a new high, and one of the things we always call as a very important barometer for the markets are semiconductors, which haven't quite broken out to a new high yet, but they still look like they're in an upward trend, which again kind of shows that there's no systemic failure, at least in the most important stock market sectors. And then, of course, we come to MSTR and Bitcoin. And what we'll note is that Bitcoin is doing something very different to the rest of the markets. You know, do we have a key support here? Yes, in 77, 76. We managed it when we broke under 86. You can see how quickly it went to that next level of equilibrium or the next level of demand. And if it breaks through this level, you know, the next level below this is probably around 60, 67, 66. So there's pretty much just a little bit holding on here. It's starting to structure up, but Bitcoin still remains actually in a downward trend. And you can see here, if we're taking legs, so that is we're taking the distance of the previous move, then it could be even going down a little bit lower. The thing that we always say on this show, and I think is most important, is obviously you've got to have patience in trading and investing. React, don't predict. Look for market structure, look for great TA, look for the data, look for the macro, and that usually helps out. Thank you so much for watching Pepperstone's Macro Edge. Make sure to subscribe down below if you're interested in finding out more about what Pepperstone can offer you, and we'll see you in the next one. Bye for now, guys.